Hi everyone, welcome to today's webinar. So we're just going to give a couple of minutes to let more people join our session before we get started. So in the meantime, you can feel free to grab yourselves a drink, make yourselves comfortable, and we'll begin in about 5 minutes. Thanks everyone. Okay, so welcome to today's webinar. So today we'll be on to our third part of our trade management series on idea invalidation. Okay. So as per usual, before we get started, just a disclaimer and risk warning. So our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. So a disclaimer, the information in this webinar should not be considered investment advice and or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie and I'll be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalist for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll do a brief recap on the first two parts of our trade management series. So that would be the anatomy of a trade, take profit, stop loss placement, partial profit, and then we'll get into this week's concepts on idea invalidation, and then we'll go through a couple of examples. So once I'm done with the slides, then we can look at a couple of live analysis charts. So feel free to pop in any of your requests for any currency pairs or commodities that you guys would like me to go through, and I'll be happy to go through them after I'm done with my slides. Okay, feel free to pop in any questions you have into the chat as well. Any questions at all throughout the webinar, and I'll be happy to answer them as well. Okay, so let's go ahead and get started. So firstly, we have anatomy of a trade. So of course, you have the basics, your entry, whether you are going in for a sell entry or a buy entry, you still have to pick a level of entry, followed by your stop loss levels as well as your take profit levels. Okay, and then we get into our trade management part of the trade, which is the break even, the partial profit, trading stop losses, as well as idea and valuation, which is what we'll be going through today. So just a recap of where you should place your take profit as well as stop loss. So firstly, we have, in this example, we are looking at a buy sell entry, as you see, because our take profit um is a support level over here, right? So our entry will probably be somewhere in the middle here, and then we're going in for a sell towards our take profit. Okay, so for this example, our take profit is placed before or above our major resistance area, whereas our stop loss is placed above or beyond a major resistance area. Okay, so maybe I'll just show you guys I'll just show you guys some tips and tricks if you are a beginner and you're just starting out. Okay, so you can look at the Forex Army. So we have a couple of guides over here. Okay, you can look at the trading guides. Ooh. Okay. So if you're not too familiar with Fibonacci as well, we have a pretty in-depth explanation here. Okay, and just some pretty basic but important things to take note of if you're just starting out with technical analysis. So over here, we are focusing on Fibonacci, but let me show you. Yeah, so this is typically what we recommend. Okay, even, oh, okay. So even if you are talking about a major resistance area, it doesn't have to be a Fibonacci confluence per se, just as long as it's a major resistance area that you have identified. Okay, you would place your take profit before a big confluence area, and then your stop loss will be placed beyond it. So in this example that we're looking at, we're going in for a buy entry. So you can see this is how we typically would recommend you to place it. So your take profit would be um, right before your major resistance area. Your stop loss would be under it. Okay, whereas in this previous example, since we're going in for a sell entry, similarly your take profit will be before, but in this case it would obviously be above the major resistance area, and your stop loss area would be up above it as well. Okay, since it's beyond the major resistance area. Okay, okay. Yep, so you can go ahead and take a look at this website. Feel free to explore. Um, we have some examples, some trading guides for you to take note of, and support and resistance, some MT4 installation guides as well. Okay, and trading tools. So you can go and explore that on your own. Okay, so next, this is what we went through last week. So last week we went through break evens and partial profits. So if you missed that, I'm just going to briefly go through what exactly a break even and partial profit is. So starting off with break even, it's a level where you are in profit and recognize that there is a risk of reversal, which means there's a chance that price will hit back to your entry or even worse, perhaps your stop loss, right? So it's basically you saying that if I'm right, price will go all the way to my target, but if I'm wrong, I will get out. Okay. So here in this example, our entry level is this blue line here, and it's in line with this double swing high resistance area. So this is our entry level because price has broken out of this swing high resistance. Okay. Wait, let me just make sure that okay. Okay, great. You guys can see my screen. Okay. So, what was I saying? So price has broken out of this double swing high resistance, and this is our buy entry level. Okay, so it's testing this level a bit, and then you can see that it's triggered our break even level, which is at this swing high level. Okay, so it's triggered this level and it's reversing back to our stop loss, or rather to our entry. So originally this level here is our entry, but then and our stop loss is way below over here, right? But because we noticed this reversal, because of this break even, right? So once price is reversed off of the break even, then we want to quickly move our stop loss over to our entry so that even if price does reverse back down, at least we get out of the trade at break even and protect our position. Okay, so if in this case it doesn't really affect your take profit because at the end of the day your take profit is still here at this green highlighted area. So it doesn't affect anything in terms of your take profit, but it protects your position and it ensures that even if price continues to rise to your take profit, then of course that's great and you would make a profit. But even if it reverses back down, which it is threatening to do, since it's testing our break even level, where our position is protected over here. Okay, so here's a example from a chart. So our entry level in this case is a swing low. Okay, it's at this swing low at 0.68314. Okay, and we are noticing that we do have a Fibonacci projection level. So Fibonacci projection, I'll go through it a bit during our chart analysis, but basically you're looking for a flash kind of shape. So you see here, there's like a lightning bolt shape, okay? And for that we used 61.8, 78.6, as well as the 100%. And we're noticing that the 100% Fibonacci projection lines up with our entry. Okay, So we're expecting price to bounce off of our entry and hit towards our take profit. Our stop loss is placed at this swing low and our take profit is placed at this swing high here. Okay. So over here, we're noticing that we have a couple of levels that are lining up with our partial profit. Um, okay, that are lining up at this level. Okay, so this level is what we call our partial profit, and I'll get into that a bit. But basically, we see this 23.6% and this 38.2% Fibonacci retracement are lining up nicely. Okay, so we're labeling that as our partial profit that's somewhere in between your entry and your take profit. So we see that price has nicely reversed off of our entry, just as we expected. Okay, and it's headed towards our take profit, but it's currently touching our partial profit. Okay. So now what we do, since price has already touched our partial profit, we saw with our break even, we're moving our entry towards our stop loss. So this way even if price reverses off of our partial profit, which could happen since this is a confluence area. Okay, confluence area basically means that if there are two or more Fibonacci levels that are lining up in that same area, that just basically makes it a confluence area. Especially because at our partial profit level here, we have two swing lows at this level as well. Okay, so that makes it a pullover um resistance level as well. Okay, so we could see price testing this level here. And yeah, so we are moving our stop loss to our entry so that if it does reverse, we can get out at break even. But we've also made partial profit over here. Okay, and if you see over here, price actually did reverse off of our partial profit level, and it reversed and it headed back down to our entry and stop loss. So this way we got out of the trade at break even, and even with actually a little bit of profit. Okay, I hope this is clear. Okay, now let's take a look at idea invalidation, which is our focus for this week. So idea invalidation um, is usually placed before your stop loss level. Excuse me. So it's usually placed before your stop loss, and it's the level which you basically admit um, that your initial trade idea was wrong and you want to get out of it ASAP. Okay, so idea invalidation, or rather invalidation, basically refers to the whole process of testing the validity of your trading idea or your hypothesis. So be it whether you are going in for a buy or a sell. So it involves analyzing the market data, market conditions, and then in order to determine whether the idea is likely to result in profits or not. So if the analysis shows that the idea is unlikely to be profitable, then it's considered invalid, and then you as a trader may choose to discard it or modify it. So the goal of idea validation is to reduce the risk of making poor trades and increase the chances of success by only pursuing valid and well-researched trading ideas. So um let's go through this example here. Okay. So in this case, we are placing our idea validation below our stop loss line here. Okay, and our entry is at similarly at this swing high, uh, double swing high resistance. Okay, and we're going in for a sell entry. Yeah, we're going in for a sell, and we're hoping for price to drop all the way down to our take profit over here. Okay, so notice how previously I mentioned that we place our take profits before major confluence areas. So in this case, we have three swing lows that line up nicely. So this is typically considered to be a major support area. Yeah, so that's why we place our original take profit or our take profit before that level. Okay. So so we're seeing price nicely reverse off of our entry as we expected, and it's heading towards our take profit. Now we see it reverse and it's actually heading back up towards our entry. And the point where we decide that we want to get out is at this idea invalidation part. Okay, so at this idea invalidation, then we will quickly move our take profit, in this case, to our entry. So previously we were moving our stop loss to our entry for break even, and now instead of that, we are taking our take profit and we're moving it to our entry instead. Okay, so it's pretty similar in logic, just that we have different names for it, I guess. And yeah, and it's basically the point where you admit that you're wrong and then you move your take profit to entry so that it gets you out of a losing trade. So you can see in this example that we were able to get out of it at break even before price rose and further and would have stopped us out. Okay, so yeah, so idea invalidation refers to the process of evaluating a potential um trade idea and determining if it should be disregarded or acted upon. So essentially, it's a way of determining if a trade idea still holds up in light of new information or market conditions. Okay, so here's how the process of idea invalidation typically works in trading. So firstly, you will have the initial trade idea, and the trader has the initial idea would be about a potential trade that's based on their analysis of market conditions, technical indicators, or other factors. Next, we have evaluation of the idea. So the trader has an initial idea about the potential about the idea, right? So then they will evaluate the idea by looking at current market conditions and other um relevant data, okay, such as economic data to determine if the initial trade idea still holds up. Now, the invalidation criteria, the trader then establishes criteria for invalidating the trade idea, such as specific price levels or market conditions that would cause them to reconsider the trade. Next, we have monitoring. So, of course, after moving your stop loss levels or your entry levels, you would or your take profit levels rather, then you would have to monitor the market, and the security in question to see if the invalidation criteria are met, and then invalidation. So if they are met, then the trader may choose to either exit the trade or adjust your position in the ways that we've mentioned earlier. Okay, so if the criteria are not met, then obviously the trader might continue to hold the position or you can even add to it. So let's look at some examples on the charts. Okay, so firstly we have our entry. Okay, so our entry is at this swing low here. Excuse me. So our entry is at this swing low here, and our take profit is placed at this overlap level. An overlap level is basically when there are bulls and there are bears that are respecting that area. So basically when there is a swing low as well as a swing high that line up in the same level. Okay, and we see that this level also lines up with a 50% Fibonacci retracement. Okay, so we've decided to place our take profit at that level, and we're expecting price to reverse off of our entry and hit towards our take profit. Okay, so it's heading down towards our entry. Okay, now this is what we call a Fibonacci extension. Okay, so the 127.2% is a Fibonacci extension or what we call a Nike tick. So I'll get into this in a little bit. But basically you are looking for the shape of a Nike tick. As you can see over here, the V shape is inverted. So this is an inverted Nike tick shape. So we're the 127 lines up with a minus 27.2. And this minus 27.2 is what we call a Fibonacci expansion. So for Fibonacci expansion, we are looking for, like the Fibonacci projection, we're looking for flash shape or a lightning bolt shape. Okay, which you can kind of see over here as well. So our minus 27.2 lines up with this 127.2. Okay, so this is an area that we are keeping an eye out for and placing our stop loss below. Okay, so our stop loss, as I mentioned earlier, we place our stop loss beyond any confluence areas. So that's why we're placing our stop loss not at that level specifically, but below it. Okay, and we're noticing here as well that this 50% Fibonacci retracement also lines up nicely with a take profit. So we have two levels lining up with this overlap level at our take profit, which makes it pretty significant. Okay, now our idea and validation level is placed exactly at that level since our stop loss is placed below it. Okay. So now we see price has broken out of our entry. Okay, it hasn't really bounced off of our entry as we expected it to. In fact, it broke out of it and it actually dropped towards our idea invalidation. Not as low as our stop loss yet, but our idea invalidation level is definitely triggered. Okay, so what we do now is we move our take profit to our entry. Okay, so this way we can minimize losses and get out of a losing trade. So you can see here, we're moving our take profit to our entry. Okay. And then once price has continued to rise from our idea and validations level, okay, it's rising to our take profit level or our original entry level, and we got out at break even. Okay, and you can see if we had continued to place our take profit over here, right? We would have gotten stopped out. Okay. Okay. I think that's it for my slides. Now we still have half an hour left. Now let's take a look at some charts. Feel free to pop in any requests into the chat. Let me just take a look at let me just open my charts. Okay, let's see. Okay, we can take a look at AUD. Okay. Okay. Yeah, let's go ahead and take a look at AUD on weekly time frame first. Okay, so on a weekly time frame, we see that the Aussie dollar is kind of moving in this descending trend line. Okay, so it is pretty bullish on a weekly time frame. If we look at the daily time frame, it does look pretty bullish as well. We also have a descending trend line. Okay, we might even have a trend channel here. Okay, we kind of do have a descending trend channel as well. Um, Basically, for a valid trend channel, you need to have at least two touches on top. and 2 touches below. Okay, at least. Okay, now let's look at 4 hours. Or actually, on our daily time frame, let's plot out some levels that we want to take note of. Okay, so this will be my first resistance at this level here, and then my first support maybe just here. And this is a overlap level as well because we have a swing low here. Ooh, okay. So this is the reason why we want to pull it back as far as we can so that we can see how many times price has tested this level before. So I have one swing low, swing high here, swing low here, and a couple of swing highs here as well. So pretty significant level there. And next I'll just place my second support below here. Okay, I have a question. How do you trade the news? Um, okay, so some one way that you can trade the news, let me just show you what we like to use. So you can, firstly, obviously, you would probably have to make use of a economic calendar. So there are a lot of economic calendars out there in the market. One that we like to use is Forex Factory. So I'll just show you guys Forex Factory, I guess. Can you guys see my screen? Yes, okay. So yeah, so I like to look at Forex Factory and then you can take a look at all of the news events for the week, apply settings. Okay, and I am only looking at the high impact events here. Okay, but you can click on this green filter here and it'll give you all of the low, medium, and high impact events. And you can control which currencies you're looking at as well and the different event types. Okay, so tell you the previous data release, the forecasted release, and then once the data is actually out, it will also give you the actual value. So you can see all of the events for this coming week over here, just at one glance. If you're interested, there are a couple of forums as well, so you can take a look at investor sentiment as well as other traders' thoughts. And then you can look at the news from the different news articles and news outlets. And yeah, that's basically how you trade the news. Go ahead and read up on whichever that stands out to you. If you are trading euro, you could maybe look at um or maybe AUD, let's say. Right? So we had the cash rate yesterday and it was so the cash rate was released at 4.35%. But the forecasted was the same, the previous value was also the same. So we can see how this exactly impacted the markets. Okay, so we can see 2:30 p.m. on Tuesday. So we can see, maybe we'll take a look. 2:30 on Tuesday. Let's look at our 4 hour time frame instead. What's going on? Okay. Sorry, I'm not sure what's going on with my laptop. Okay, got it. So 2:30. Oh, okay. Because this timing is um The timing is a little bit different, okay, on my trading view and on my Forex factory. So it doesn't really link up. But if we look at the Tuesday, we can see how it impacted the charts, and you can see that price dropped over here and then started to pick up again on Wednesday. But this is on the 30-minute time frame. Okay. I don't think this had much of an impact since the actual data that was released is similar to the forecasted as well as the previous. But things like mm, if you look at the CPI, maybe if we look at Swiss franc in a bit, it was slightly lower than the forecasted. So we can look at how that impacted as well. But yeah, that's basically how you can make use of the news to trade. Yeah, feel free to just copy the names of whichever news event that you're looking for into Google and then look for um, an explanation on what you are expecting, what the investor sentiments are about um, the investor sentiments, but of course also the governments, um, what they are expecting to do as well. Okay, yeah. Uh, yeah. Let's get back to our 4 hour time frame. Okay, so I'm going to place my first resistance here, and then my first support maybe just here. And then I think I'll place a first resistance, an intermediate resistance here. Yeah, so if you look here, it'll give you a list of all of the events that's happening for the week. If you want to know more in depth, on each of the stories, you could maybe look at um, some of the um, news articles from this list here, because these are pretty up to date, like 1 minute ago. But of course, take all of these with a pinch of salt because it's from different news outlets around the world. So you can take a look at those over here, or you can, like I mentioned, just Google some of these events. No, these happen weekly, so it's it's basically every week. So depends on your trading strategy. So what I'm talking about now is a weekly time frame. So I'm looking at all of the news for that week. Yeah, I hope I'm understanding your question. Okay, so this is my intermediate level of resistance here. Um, Now let's go in with some Fibonacci levels. Okay, so I have a 23.6% Fibonacci retracement that lines up with my intermediate level. Uh, let's see if we have a projection. No. Okay, I have another retracement here. Okay, my 38.2 lines up nicely. Um, 38.2 maybe, yeah, 38.2. So my 38.2 lines up with my first support. Let's see if we have anything else. Okay, my 61.8 Fibonacci projection lines up with my first resistance. Okay, so they don't really have to line up exactly because these tend to be areas more so than levels, than specific levels. Okay. And I personally don't like this 0 and 100% because I find it a bit messy. Okay, so let's go in with our indicators now. So I like to start off with MACD and Ichimoku because at one glance you can see exactly what the signals are. Okay, so price is moving below the Ichimoku cloud, so it's giving us a bearish signal. And on our MACD, it's also giving us a bearish signal, which matches our analysis. Okay, and let's see another RSI maybe. Okay, RSI, we have price moving in a descending trend line. Okay, so it's also supporting our analysis. Okay, it's not really a trend line, but you can see over here that um there is a divergence. Okay, so over here price has made a higher high, and over here price has obviously made a lower high. Okay, so that's a bearish divergence. Also supports our analysis, and maybe let's look at Bollinger. Okay, Bollinger isn't really telling us much. Let's look at stochastic. Okay, stochastic isn't telling us much either. Okay. Okay, so we're going for a sell from this intermediate resistance towards our first support. And if you're looking for maybe another sell, would go perhaps even until here. Mm, okay, because price has tested this level many times in the past, as you can see. So price is typically attracted to such strong areas of um, resistance or support. In this case, of course, support. So once price breaks out of our first support, we should have enough downside confirmation that price will continue towards our second support. Okay. Yep, I can pop in the website over here. It's just Forex Factory. Yeah, so this is just for you guys to look at, all of the weekly news events or however long you want that's scheduled for that week or month. Okay. Okay, let's look at another chart. I think I mentioned earlier that we'll look at Swiss. Oh, okay. So let's start off by looking at our weekly time frame. You can see it's also pretty bearish on a weekly time frame. On our daily time frame, it's pretty bearish as well. Let's look at 4 hours, also pretty bearish. Okay, and we typically would recommend to continue to follow the trend. So if it's a downtrend, then we will go in for a sell. Uptrend, of course, we're going for a buy. Okay, this is my first support, and you can see once again it's an overlap level of support. Um, okay, and here I have my um yeah, here I have my first resistance. Okay, maybe I'll put a second resistance here as well. Okay, so now I am going to see if I have any retracement levels that line up. Okay, and I have my 23.6 and 30.2. Let's see what else we have. Okay, my 61.8 also lines up nicely. Mm, okay, my 100% 78.6 kind of line up as well. Oh, okay, but it's no longer valid because price has already broken past these levels. Okay, so earlier I mentioned a Nike tick shape, so I just want to show you guys an example. So as you can see here, this is an inverted Nike tick. A upright Nike tick will look something like this. So you want to make sure that price surpasses 100% of the head of the tick before you use this method, this Fibonacci extension. Okay, so for Fibonacci extension, we use the levels that are greater than 100. Okay, let me get rid of this. And okay, we're using a retracement, and then we use the levels that are greater than 100%, so the 161.8 and 127.2. Okay, and you can see that it lines up nicely with our second resistance and first resistance, but because you can see that price has already broken past these levels, so these are not valid. Okay, just wanted to show you guys an example of that. Okay, now let's look at some indicators. So price is moving below our Ichimoku cloud, so it supports our bearish bias, and our MACD is giving us bullish, so we're going to remove that. Let's look at RSI. Um, RSI is giving us bullish. Okay, so let's remove that. Let's look at stochastic. Okay, stochastic is kind of not telling us anything. Let's look at our moving averages. Okay, price is moving above our SMA but below our EMA. Okay, so it's bearish on our EMA but not our SMA. Now let's look at Bollinger Bands. Okay, it's bouncing off of the top band of or the upper band of the Bollinger Band, so that it does support our analysis. Okay, I think that's it for this chart. So we're going in for a sell from our first resistance towards our first support. Okay. Okay, I think that's all the time that we have for today, but let me know in the chat if you guys have any other questions. Um, Let me just make sure I've answered all of them as well. Okay. Yeah, I think that's it for today. I hope you guys found this session helpful. And yeah, have a great rest of your week, and I will see you guys next week. Bye, everyone.